Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Trading coming at you with a follow-up interview to one of my all-time favorites, Duostech, Chuck Ferry. Ticker symbol DUOT. And Chuck, thanks for coming in and give us an update on what's happening in your world.
No, appreciate it. I always enjoy my interviews with you, and to be honest, when you do the little thing with the stock ticker lines and stuff like that too, I always learn from that as well. So
perfect. Well, we'll be able to go over that in a little bit. So you just announced your quarter with yesterday, and I'm not going to spend a lot of time there because the reality is timing and certain things have played a role with the quarter, but I in no way am under the impression that the need for your technology for the railway system in the United States is going to go away.
Yeah, that's right. I mean, like the reality is, all businesses, have ups and downs. Look, we had some financial headwinds this quarter, and we've talked very plainly about those in the earnings call. Which, if you want to review those, anybody can, of course. But I'm telling you right now, from my viewpoint, the company's in the best spot it's ever been. And is very, very well poised, technically, operationally, and also financially, for the next, half a year or so to take advantage of what we think is going to come here with the industry. You are correct. There's overwhelming consensus, from Class 1 customers, short line passenger customers, now regulators, and a lot of other large industry groups that are in the rail space, that our technology and other types of technologies are the way of the future, and it's just a matter of time before it's fully adopted.
and that's ultimately that's the only thing that matters. The only thing I want to clarify, because there are some people that instantaneously came up with this thought that you're going to go raise capital.
We don't need to, and we're not going to, because if I raise capital right now, it's going to be a crappy deal. I'm not sure if you can put that on your video here.
I can definitely put it on there.
Sure.
Yeah.
And we're just not going to. And you know, a lot of your audience may not understand. We had some opportunities to raise additional capital, or let's just say over the last 6 to 8 months, and we actually walked away from some of those deals because we didn't think they were good deals, and we didn't think that they would be helpful to our current shareholders or to the company, and so we chose to walk away from that. So, we will raise capital if and when we need it. And only if it's a good deal. But right now we don't need to do that. I've got about $1.5 million of inventory on hand. So we have what we need for the next couple of portals that we're working on right now. You know, we're going to be focused on flipping over into the subscription business. And quite frankly, that doesn't really require a whole lot of capital for us right now.
Okay. So one of the things I saw recently, you've expanded your relationship with Dell and NVIDIA.
Yeah.
Was that a bigger CapEx spend on your end, or is that just a relationship thing?
Well, it's a little bit of both. So one, we use Dell computers and servers and other hardware. It is commercial off-the-shelf technology from Dell computers, as well as from NVIDIA. But particularly in Dell's case, they build into that proprietary software and the way they set that up, such that it's very specific and bespoke to us. So, for example, if you're a Class 1 railroad and you want to go buy Dell servers to use our system, you can't do that. You have to buy them through us. Dell will sell them to you through us. So we have a really strong relationship with Dell computers and NVIDIA. Recently, we have made some breakthroughs where the amount of data that our solution acquires and has to process at the edge with all these machine vision cameras is so great. You've got to compute it at the edge. You know, probably 6 months or so ago, it would take maybe 30 minutes or so to crunch all that data and present it to the customer. So our competitors have the similar problem where their data is latent by 30, 60, 90 minutes. We've now broken through where we can crunch that amount of data in 60 seconds.
Wow.
So 60 seconds from the time a rail car passes through a portal, 60 seconds later, the customer can see in the user interface if there's something wrong with that. And what that means is that can now be automatically transmitted to the locomotive engineer who's driving the train. It could be sent directly to mechanical carmen, you know, to stop, you know, literally immediate derailment things. And that's a huge breakthrough. A lot of folks may not realize it, but that's why a lot of folks in the Class 1s and passenger rail are very excited about what our system can do.
Oh, absolutely. I mean, you're talking, you can get a whole, within 60 seconds, you can get a hold of the locomotive, the driver, I guess, whatever.
Yep. Yeah, the locomotive engineer. Yeah.
Yeah. I mean, and literally tell them, shut it down, stop, right?
Well, not only that, so you have hot box detectors out there, and those have been in the news, and that's an older technology. What they do is they basically just it's kind of like a dumb technology. It just sends an alert that just says, "Hey, you got something wrong. You need to stop." In our case, you can actually send the actual images so the locomotive engineer could actually see them himself, or a dispatcher can actually see it, you know, with his own two eyes, and then make it the proper, you know. So not only are they getting an alert, they're getting a more meaningful detection of what's actually wrong, and also it's more locational, so it'll make it easier and faster for them if they do stop the train immediately, or if they stop the train at the next logical place to find where the defect is and go to it immediately is the point.
And that's huge.
It's a big breakthrough for machine vision AI wayside technology, which is what this is. It's a real big deal. Yeah.
It's funny. I met with a company. It's a satellite company that's been collecting data for years on the weather, right?
Mm.
I mean, and not lots and lots of data from space.
Yeah.
And the thing is that we talked about was the fact that having all that data is fantastic. And yes, data is the most valuable commodity in the world, but mining through that data is the problem, right? Looking for those patterns and all those things that there's so much data that it would take a human being or forever to try and identify patterns, right?
That's right. So again, what our system is doing is it's going through hundreds, thousands of images that are being collected. It's analyzing those, and it's basically spitting out a kind of a report that can be actioned on relatively easy with the right skill sets. And I think the other thing we kind of talked about in our earnings call, I was talking with one of the chief technology officers of one of the Class 1 railroads, and he and I really agreed that 10 years from now, if you look forward about how this will work, so you've got thousands of wayside detection systems out in the North American network. You're getting an expansion, of course, of our type of technology, machine vision, wayside detection systems, but you also have telemetry and sensors that are actually on the locomotives and the rail cars themselves. You've got telemetry and sensors in some cases on the track at crossing points and things like that. So the future is really where you're going to have a safety management system that's pulling in sensor data from wayside detection systems like ours. It's pulling in the telemetry that's coming off the locomotives and the rail cars. It's probably pulling in additional information that's coming in from the track itself. And through a set of analytics and artificial intelligence, you are then presenting information to help the operators, operate those trains in a safer manner. This is similar to what they have in the airline industry, and I am convinced that the industry leaders in our case are headed the same direction, and we're right in the middle of that.
Okay. There was the last time we spoke, there was the Railway Safety Act. It doesn't sound to me from what you're describing now, from these industry functions that you've taken part in, sounds like the industry itself is on board with safety. It's not so much the Safety Act that's going to drive it.
Yeah, I think it's accurate to say that the Class 1 railroads through by themselves and with the American Association of Railroads, the AAR, regardless of what happens with the Safety Act, in my view, they are very, very laser light focused right now on safety, and they always have been. I think obviously there's even more emphasis on it right now, and any analyst can take a look at the investments that especially the Class 1s are making, but also the short line railroads and passenger lines and the car owners and car shippers are all making real investments into safety, and I think collectively as an industry they're interested in heading to that direction where there's a more comprehensive safety management system. Another thing that's kind of come out in that vein is the idea that sharing safety information, which in the past has not always been as freely shared. I'm personally starting to see some of the Class 1s basically band together to share information across companies on some of the safety data that they have, which can benefit the overall network, of course. And I think that's a trend that you're going to see going forward. That's part of the reason why, our system, which is currently used by 3 of the Class 1s, as well as Amtrak, I'm starting to be asked questions about, hey, how do we standardize this technology across the entire industry? so that the investments that these class ones have made so far are kind of protected, and we kind of take it to the next level. So that's an interesting thing. That's outside of the Railway Safety Act. The Railway Safety Act right now is for folks that aren't close to it. The bill is waiting to go to the floor of the Senate, and then on the House side, it still is in committee. But there is actually bipartisan agreement that some sort of a bill should be passed. Of course, it's sitting behind a lot of other, important issues that are being worked on right now. But there still is strong support for it, mostly being driven. So the sponsors of the bill, the two senators from Ohio, one is a Democrat, one is a Republican, of course. So there's bipartisan there out of that. And then our state senator, Senator Rubio from the state of Florida, because we're here in Jacksonville, Florida, is also a co-sponsor of that bill. So I think at some point it will go through. But I think it's important to understand our success here at Duostech is not relying on that bill passing. I think the industry is going to push that way anyway. So I think either way, we're positioned in a good spot for that.
It's not going to hurt you if it passes, right?
No, certainly not going to hurt us. So it'll help, and it could accelerate things. It could accelerate things, for sure. But it's not kind of a have to have, so to speak.
Got it. Okay. Let's so real quickly, you sold off a little division that was prisons monitoring, right?
Yeah.
Not a significant portion of the business, but did take up quite a bit of time on occasion.
Yeah, what we did is we were working a very small job as a legacy job with Monroe County Jail and Courthouse. It's run by the Monroe County Sheriff's Office. It's down in the Keys in the state of Florida. A great customer, and ultimately we decided it's a small contract. It was probably pushing, maybe about $100K per year. It was a pretty small job, but it was requiring still quite a bit of effort. So after we kind of finished the last round of installations for the sheriff's office there, we basically sold the contract, so to speak, to another smaller company that operates out of Miami that's a bit closer to that county. And the gentleman that's the CEO of that company was actually in Duostech and helped implement that contract. What it was, it's basically a set of software and cameras and some hardware that helps control the surveillance and the doors opening and closing in the jail. So again, it was legacy for us. It made sense for us to let it go, so to speak. But we tried to do it in such a way that we took care of the sheriff's office down there, and we did it kind of in an elegant way.
Okay, perfect. Then new hire. You had an interesting new hire that I think is going to try and help expand different areas where you're headed.
Yeah, we hired Chris King. Like a lot of the folks, I've been trying to poach Chris King out of his former company that I ran as CEO for like the last 3 years. I was finally successful in that endeavor. Chris comes to us. He's worked for me before as my lead for commercial activities. So he and I have already a number of years working together, and he understands kind of how I think about things, and he's super, super, super talented. He's been here for about 2 months. He's really made a big impact in getting us more organized and getting us more focused and disciplined. And right now we've got a pretty robust pipeline. I think we talked on the earnings call where we've got probably, over a dozen portals in active evaluation through a number of proposals that are out there right now. That includes a pretty lucrative international opportunity for us. And Chris has led all those activities for the last 2 months. And so I'm pretty excited to have him. Having him here allows me to do, kind of do some of the other things that I need to be doing as well. And kind of focus more on the strategic activities and and really focusing on closing with some of the larger contracts that we have.
So, building the team, I mean, we've talked about this before because you brought in a lot of new team members, right? But you brought in a lot of talent from the railroad industry itself, a lot of expertise there. You feel comfortable? You got your team where you want it?
Yeah, I do. I will tell you, not just at I'll say the senior management level, but the kind of the next layer of leaders below, both technical leaders and the leaders in some of the other functional areas. If you walk in my building, you will feel the intensity and the talent inside this building. And when I say that, I mean we've largely kept the level of staffing kind of the same actually for the last 2 or 3 years. But the folks that are in those slots are just incredibly talented and all that sort of stuff. And then, probably the other piece that goes with that, we are planning, I didn't really mention this in the earnings call, but now that we're kind of positioned where we're at with our subscription offering, we're about to add more horsepower into the commercial team right now. So we'll be doing some further investments in that for sure in the coming 60 to 90 days.
And it's probably a good environment, I would think, to go after some of those. Yeah,
3 years ago, we've talked about it before. 3 years ago, the overall pay that was here at the company when I joined was not all that good across the force. Our benefits weren't all that good, and there wasn't really a lot of incentive pay or performance pay. We've been able to correct that, and I do not have a problem recruiting right now. We're able to recruit pretty effectively, and we're retaining folks now as well. So I think you got a team that is absolutely positioned. So when we really start cracking a nut on our subscription model, some of the other things we're going to do, you've got the right team in place that's going to be able to take advantage of it. So
you, Chris, you said his name was Chris.
Chris King is his name. Yeah.
All right. So was he familiar with what DUOT was doing prior to coming over?
Yeah, he was, because he's probably come and visited us 3 or 4 times, and we've stayed in touch throughout. So yeah, he was familiar with what we do. But again, most of his experience is actually in the logistics and power industry. But I'll tell you from my own personal experience that the power industry, quite frankly, which is also pretty technical and involves deploying technology, out into the field and maintaining it and operating it. It's very similar to what we do. But I will tell you the technology that we produce is so unique. It's not like you go out and you find people that, hey, I need somebody that's been building railcar inspection portals for the last 30 years. They don't exist. Right. So what we found is if we bring in, real talented guys, whether they're hardware guys, software, IT, AI, commercial leaders, if they had good success where they're at before, and a lot of times I bring in folks that have worked with me before, so they've kind of proven themselves and I know who they are. That's typically who we're pulling in, and they learn it really, really fast. But to your point, we brought in a lot of railroad talent. So I have David McKee, who I've talked about before, 40-year railroader, and he can school us both all day long on railroading. It's pretty cool. And I take him with me when I go visit the Class 1 railroads. I have another guy who's got over 25 years in the Class 1 railroads, leading commercial teams. Louis Muldrow, and then I have 3 very experienced mechanical carmen, and these guys are absolute subject matter experts on everything around rail cars and locomotives, and they're all those guys are involved in helping drive the business right now.
So now that Chris has had a couple of months to really get in feel with the operation, what does he think of your technology?
Well, his reaction is the same as all the railroaders when they see our technology. They're like, "Holy smokes! I can't believe that you guys can do this." I think where he's at right now, he's got a good understanding of the technology because he had a good technical background before he came. I think where he's really at right now is working on, is you and I have talked this before. Our company doesn't have any problem getting leads. It doesn't have any problem finding people who are interested in the technology, and usually they're stunned by it when they see it. Our company's challenge, and I've been open about this, as okay, we got to close deals. Okay, and so Chris's focus, and that's why I brought him, because over at APR Energy, where he came from, and that's where I previously that was my previous company. Chris was one of the key guys that actually helped close big, multi-million-dollar deals, and that's where his focus is right now, and that's where I think that's where you're going to see some good news here in the next couple of months because of that.
Fantastic. And Chuck, as always, man, I always enjoy catching up with you guys. What do you think the next? I mean, he just kind of laid it out. I mean, it sounds like you've got some irons in the fire that may be close to getting done, and when those things get done, those will probably be catalysts for the stock, I would imagine.
Yeah, I think, and we talked about this in my board of directors meeting. Is again, we're currently right this moment, we're transitioning from a CapEx model to a subscription model. We'll still have a little bit of both. And in that transition, you got to take a little bit of pain, and you're going to have some headwinds, and that's what we're seeing right now. But that being said, what you really want to be looking for is, okay, when we are able to partner with our current Class 1 customers, and those current Class 1 customers start allowing us to add subscriptions onto the existing portals, that's a key marker. If I was an investor right now, and I am an investor because I've got my stock as well. Okay, that's a key marker to look for. Okay, the next marker is going to be the subscriptions when we're able to start announcing subscriptions. Okay, the other marker is going to be what's going on with when we start seeing one or two of the Class 1s that I'm currently serving actually take us into the American Association of Railroads and start opining that we should standardize this technology. And then, of course, if you see any movement with the Railway Safety Act, that's another key marker. So those are kind of strategic markers that we're working very, very hard, below out of the public view. Okay. But those are markers that you would look for the long-term value of our stock, if that makes sense.
And if you start seeing traction there, you can, I would say that you should feel pretty damn good, because that just indicates that the story is going to get better and better as time goes on.
I think so. Yeah.
Yeah. All right. So look, let's take a look real quick. I'm going to move your logo so that I can chart. But I got a feeling 2024 is going to be a good year for Duostech.
I think so. I have look, while you're pulling that up, we had one of our current shareholders add some more money to us. So he continues to believe, he's a very sophisticated investor, and very supportive. And then, the management team and board members right now are waiting for the blackout to lift so we can buy some more. So.
Oh, I'm so glad that you just brought that up. That's perfect, right? So that's something that some of the retail investors also may not be aware of, is that there are blackout periods where, because of what's happening internally with the company or things that they know or are working on, they are not able to actually go out into the open market and buy the stock. And those are called blackouts, right? So when those windows open, especially if you're a company that's got a lot of stuff going on, that sometimes makes it difficult to get those open windows where you can buy.
Yeah, we also have one of the things we did. We implemented a employee stock purchase program. So probably about 75% of my employees are enrolled in that. We started that at the beginning of this year. So we got a lot of our own employees right now are actually, through a controlled program, are purchasing the stock of the company as well, along with your 401k contributions.
I see. I love it. I love that. So, all right. let's just take a look real quick technically, see where we're at. So you actually broke through the long-term trend back here. Wait a minute, there we go. Back here. And things were looking pretty good. It looked like actually this was going to become your floor, the $5 and
Yeah.
And it didn't. I mean, it tried to act as the floor, but you know,
Yep.
the market itself, and I'm going to go back to this, it's very tough for a stock to buck the market, right? And the market for the small micro cap names has been just abysmal for 30 months, and hard to gain traction when the entire sector is just constantly getting hammered. So I don't put that on DUOT. What I will say is that there will be technical guys out there. So you got the 50-day moving average, which crossed below the 200-day. That's the death cross, which of course doesn't sound good. But it is a bearish indicator.
Today, so
You've got $3 or $2.95, I would say, is acting as a big support area right now. And that's because it's acted as support in the past. If you crack through that, could you come back down and test this 250 area? Yes, you could. Could you go all the way down and test the all-time low? That's possible as well. I mean, anything is possible. I would say that if that were to happen, for me, that would be the opportunity to back up the truck and load up. Now, what anybody else sees, that that's up to them. But
sure.
If you listen to what Chuck just said, the conversation that we just had, I would say we're in the infancy stages of the industry really latching on to this technology, right? And I see good things ahead. You have your team built. There's just not a lot of negatives. You don't need to raise capital. Make that very clear. He doesn't need to go out and take a crappy deal and raise capital. You're in a good position. Right here is actually an interesting spot. If you look at it, you came down and you tested this area and bounced off of it today. Decent volume, but nothing like the volume that you had back here. So this volume over here, I don't see any big sellers. Let's put it that way. There's no big sellers that are dumping and getting out of this thing. So at least that's my view.
No, and you can look at our. I think people that know how to do this go look at who's owning our shares. Our big shareholders are not. They are not selling. They're holding. they're just saying. So
yeah. So that's something to take into consideration. This is a real artificial intelligence play. I know it's a hot word and all that, but it's a hot subject. A lot of companies claiming that they're artificial intelligence, deep machine learning, that aren't. I mean, let's just face facts. There aren't. This company is an artificial intelligence and deep machine learning company. There's no BS here. There's no smoke and mirrors. This is the real deal, right?
That is right. And to be clear, all of our Class 1 railroad customers use that AI every day, and they find real, mechanical defects that cause derailments. And our Amtrak customers are also starting to use it now as well. So it's real, and the railroads are tough customers, and they will not let you claim something that you're not actually delivering. So
it's not, and it's just going to get smarter, right, Chuck? I mean, it just gets smarter as time goes on.
It does, and what we found with so our AI is what you would call moving motion and pattern detection on not the same thing over and over, but multiple different kinds of things. So it takes a team that consists of data scientists, software guys, but also mechanical carmen who know what they're looking at to actually develop that. And then we've also found, unlike some of the pure play AI companies that claim otherwise, just like any software, AI algorithms require maintenance. It's a fact. So anybody that says you can deploy AI and then just leave it alone and never touch it again, that's just not true in our industry. You got to maintain it, and you got to regularly provide additional releases to make it better. So,
all right. So look, this is what I recommend. I kind of look at this. It's Christmas time almost. This is a gift. This is the way I look at it. I'm not telling anybody to buy the stock. That's not what I do. But if I were, at the very least, I would put it on your radar. This is an area of potential price support. And if it were to go back down and test the low, I would consider that a double bottom and an opportunity to load up the truck. That would be my view. But I definitely think that this is an area that is a gift. I think it's not appreciated. The story is not appreciated. And eventually it's going to wind up taking out the resistance area at about $7.50. And hopefully that'll become your floor. And then it'll just be off to the races. So, all right, Chuck, let's do this. Let's maybe after your next quarter, your next earnings call.
Yeah, absolutely. And I think we'll be talking about some good commercial news after that next earnings call.
All right, let's. I'm looking forward to that. All right, thank you, Chuck. Thank you for coming in. Anything that you feel as though I missed?
No, you as always. I think you're pretty thorough. So.
All right, hold on one second. I'm going to turn this off. Oh, look, Coco Bella decided to join us for our meeting. Okay, good dog. Thank you for tuning in to today's interview with Chuck Ferry, CEO of DUOT Technologies, ticker symbol DUOT. If you enjoyed today's interview, I'm asking you to please give us a like, give us a share, and make sure you hit that subscribe button. All of those things are extremely important to us here at Alpha Wolf Trading. And I want to thank you for taking the time to listen to the interview. And I also want to thank you for giving us a like, giving us a share, or hitting the subscribe button.